Hello everyone, I'm Michael Glass from michaelglass.com, and I'd like to thank you for continuing to watch our video series on how to be a better trader. As always, we like to start our videos off with our disclaimers. No matter what symbols you see today, they should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, future options, they have a level of risk associated with them. You can lose money. The strategies we talk about today are for educational purposes only. Future results are not guaranteed. And finally, most importantly, any investment decision you make is your own responsibility. Trade at your own risk. So again, we've had this great 5-part video series on becoming a better trader. We broke it down into, do you know what time it is? And that's all about market context. Are you trading at the right time? Are you trading at the, are you aware of what's going on in the market? News, the time of day, all these things are important to identifying what is the proper trading setup to apply to the trading time. Of course, technically speaking, is all about technical analysis and how we can use it to confirm what we're seeing. Price action is king. We want to look at what the price is doing, but we can use indicators to confirm what we're seeing, and it can help us, eliminate certain things. But again, we must understand that technical indicators are a mathematical calculation of price. So price should always be your first place to interpreting what the market's going to do. After that, we talked about chart patterns. Now, chart patterns is all about price actions, but being able to recognize patterns as they're developing is very important to be a successful trader. Stop in the name of money. Just like this last video, stop in the name of money, understanding how to manage your trade, understanding your risk-to-reward ratio. That doesn't mean whether or not you have a bad risk-to-reward ratio is a bad thing. It's just, do you even know what it is? Do you know that you're risking 1 point to gain at 1 point? Are you risking 1 point to gain 3 points? Do you even know where your targets are? All these things are important, and all these things are very important to being profitable. A lot of people are not profitable, not because they have bad strategies, but because their risk-to-reward ratios are kind of thrown off, and so 3 winning trades are blown out because of 1 losing trade. So in this video, we're going to talk about what I believe, and anybody that's watching my videos know I'm all about the psychology of trading. So mental fitness for traders is what today's video is all about. How much time do you spend working out your mind? How much time do you spend working out how you perceive the market? Again, it's very overlooked. A lot of people are always out there looking for new indicators, looking for new gurus to follow, newsletters to follow. But are you working your mind? Are you training your mind, reading books, watching videos, whatever it may be? There's nothing wrong with that. But it has to be about how you're perceiving the market. It's not just about external things that you're just looking at and doing what it says. You have to better train your mind so that you can make decisions for yourself and not just what other people are telling you to do. And so when you have that ability to discern the market, specifically based upon your trading style, based upon your capital management, based upon your risk tolerance, you'll start to feel the market is working with you and not necessarily against you. A better picture here might have been Neo. I always like to talk about Neo in the first Matrix, and at the very end of the movie, when he finally goes to fight the agents, suddenly all he saw the numbers falling down, and he was able to interpret those numbers. Well, as you're training yourself, and as you're training your mind, you're training your ability to interpret price action and chart patterns, the market will begin to slow down. That's what all the great athletes talk about, that the bucket was so big, everything was moving in slow motion. It's just like that for traders when you train your mind. And so one of the most important things to understand about training your mind, and more importantly about the market, is that it's not out to get you. When you're not trading with a purpose, when you're not trading with a plan, you may feel like the market is out to get you because your trades aren't working out. But if you're trading a good trade, if you're trading based upon rules, if you're trading based upon criteria, it doesn't make a difference whether the trade works or not. You followed your rules and let your rules tell you what to do. If it doesn't work out, and if you're using a trade journal and you're documenting your trades, and you start to notice some changes, sometimes you have to adjust based upon market conditions. And so yes, you may have to adjust your trading setups, you may have to adjust your trading plan, but as long as you're following your rules, it's a good trade. The market's not out to get you. And so basically we have to look at, as we're training our mind, how do you see the market? As the price action is starting to develop, and you begin to perceive or try to interpret and infer meaning from those chart patterns. And as the candles are starting to form patterns, you then begin to, based upon the videos you watch, training you have attended, the beliefs that you have, you begin to apply or develop beliefs about what you think the market is going to do. Is it going to continue up in initiating trades? Is it a responsive day where we need to be trading the extremes? Based upon that, you now apply your level of confidence, and you will consciously or unconsciously enter the trade. Now, what's important about that is that ability to make a judgment and decide what to do is very important. I always end these videos, you guys know in my video series here, we always talk about it doesn't matter what you do, if you don't pull the trigger, it's off or not. That unconscious confidence you have in the market based upon what you believe is going to happen, that's all mental. So if you're not able to pull the trigger on your trade, that's your mental side of trading and what's going on, that you have that fear, you have that. I've got a great video, and I'll try to link it to this one, where I talk about the fears of trading and fear of missing out or fear of pulling the trigger. So, your unconscious always will start weeping your head. There's that movie coming out right now. It's an animated movie, but it's talking about all the little things in your head. And that's what that conversation that's going on in your head. Pull the trigger, don't pull the trigger. If then conversation. If the market does this, then I'm going to do that. All those voices, as a market, as you're perceiving, again, conscious, unconscious, allow you to make a judgment, but more importantly, act upon your judgment. What you believe is going to happen, are you able to pull the trigger and act upon that? Common mistakes that people have is they get stuck in a cycle. The market is out to get me. They keep doing the same thing, and they're in a cycle. Again, if you keep a journal, you should be able to look at your results and see that something's not working. Maybe you need a bigger stop. Maybe you need a longer target. Again, examining your risk-reward ratio. You have to be able to look at your trading to get out of that cycle, because you're going to be doing the same thing. And the only way we can do that is if we review our trades and make adjustment based upon current market conditions. Not understanding market context. As we talk about, do you know what time it is? You have to understand what the market is doing and where it may go based upon the conditions of the market, news, time of day. And so those things, if you don't understand that and you start losing trades, that can affect your confidence. Again, are you pulling the trigger on your trades? Is it going to work this time? If it was not about this time, these are your rules. Trade it. Now, if your rules and your percentages start to go down, well, then yes, you can make adjustments, but make adjustments based upon your rules and your results, not based upon your emotions. Now, again, as I focus in on being a rules-based trader, that doesn't mean you ignore your emotions, your feelings. You have to acknowledge that they're there, but you have to acknowledge that they're there and be able to move forward. You have to be able to take that step forward. Very big thing is event-based trading. Oh, you're chasing the market. Oh, I missed that trade. Oh, I just got stopped out. I got to make that money back right now. I've always say in my videos that I've never made money when I trade based upon my emotions. Fear of missing out. Again, chasing trades. Not knowing your numbers. I started with this and I'm going to end with this. You have to know your numbers. You have to be documenting your trades. You got to be going back and reviewing your trades and seeing, are they still working? Because the market changes. And sometimes, and again, when we talk about the type of day, you have to know, well, what's the best trades for this type of day? What's the best type of trades for this type of day? In this current market environment, are you trading the right styles, the right opportunities, the right setups? And again, the Ron and Ira quote, are you applying the right strategies based upon the opportunities the market is giving you? So first and foremost, you have to treat trading like a business. We don't just get up and trade just to trade. All these CEOs don't, willy-nilly, I know we had that great movie, Wolf on Wall Street, Leonardo DiCaprio, and that was a very colorful personality, and I believe there's some truth to that character. But, if you want to be successful, remember what happened to them in the movie. You have to treat it like a business. You have to be professional. You have to be accountable to yourself. Trade, paper trade. So many people go straight to cash and they lose money. And again, that affects their emotions and they're not able to pull the trigger. The way you build confidence, what do you see before every baseball game? Batting practice, drills. What do you see before a basketball game? shooting practice, drills, where you see more football games, throwing a football, catching drills, drills. You've got to practice just like the professionals do. Always ask yourself if-then statements. If the market does this, then I'm going to do this. Always be present and aware of what's going on in the market. I just said it, if-then scenarios. If the market does this, then I'm going to do that. And again, always acknowledge your emotions. So I just want to go back and talk about this again. Practice, practice, practice. This is what the professionals do. There could be a good argument right now for Tiger Woods. He doesn't play in a lot of tournaments, and he's struggling right now. Now, obviously, that's not practice, but people have talked about, is he practicing like he was before? Are you playing as much as before? You got to practice. You got to develop the skills to become a professional, and you can only do that by practicing. You got to take the time outside of the market, not just during market hours. Before and after market hours will make you profitable. And so again, if we talk about thinking about the context of the market, based upon certain market events, should you be in the market? Should you be in the market if you're trading a stock? Should you be in the market during earnings? Your call. Should you be in the market during the FOMC announcement? Should you be in the market jobless claims? When the market hits support and resistance, what are you going to do? What is the market telling me right now? Is it a bullish market? Is it a bearish market? Is it a responsive day where we're trading support and resistance? Or is it an initiative day where we're trading breakouts? You have to be able to understand the context of the market. In the end, the market's not out to get you. You're to be a successful trader. It all depends upon you. It's all about you. You have to be accountable to your trading and trading like a business. And remember, there's no emotions in business. You can be right or you can be profitable. Again, I've never been profitable trading off my emotions. Don't do something that's permanently foolish, entering a bad trade just because you're upset about the last trade. There's nothing wrong being upset that the last trade didn't work out, but move forward. Move on to the next trade. That's one of the things I always say to myself, on to the next trade, on to the next trade. And that's sort of get my mind right, so that I can move on. You can be right or you can be profitable. You can stay in a trade that you should have been stopped out of, if you're trading like a business, trading like rules, or you can get in a tick for tick battle, one tick in your favor, 3 against you, one tick in your favor, 3 against you. You can be right or you can be profitable. I almost want to start singing, the Let It Go song, but that's the key to success, key to about your emotions. Develop triggers, develop habits that allow you to move forward and to let it go. So, you guys know I like to end the videos all the same. What's your edge? What's going to be your mental edge? How are you going to develop that mental edge? Who are you going to be as a trader? That edge is how you then look at the opportunities that the market is providing you and then apply the right strategies based upon market conditions. Key to being a successful trader is to trade with the professionals. What are insiders doing? What are the big boys doing? You have to know that. That's how you level the playing field and you trade when the odds are in your favor. That's all about being a successful trader. Being able to distinguish between low and high risk trades. Here it is. It doesn't matter about your trading system, about your indicator, whatever trading room you're in, if you don't pull the trigger. And that's all about the mental side of trading. The psychology of trading is what's holding you back. And again, I got a great video on the fears of trading for you to check out. Again, check us out on YouTube, Facebook, and Twitter. This has all been about going to the next level. I got a great video series. First, starting with the building blocks, the basic things that you need to know, and then we're going to help you develop a trading plan. And then we have another great video talking about some setups that you can use to be successful in trading. After that, we also have mentorship sessions. So if you go with the video, you get a free session with me anyway. But if you just want to go straight to the mentor sessions, I can offer that to you too. Now I do want to offer a bonus for you sticking around watching all the videos. I got a great video here based upon the 30-minute breakout rule. It's a great strategy, especially some people do 5-minute, especially when you're talking about stocks. Some people do 30 minutes, especially when you're talking about futures. All the rules are the same. It's just really looking at how you play it for the time period. But I got a great video on that. Thank you for watching all these videos. I hope to work with you soon. Thanks, guys, and I'll see you next time.